Hi there, welcome to Grain TV. It's Thursday, March 3rd. We had an up day in grains. Let's take a look at the Grain Hedge trading platform and see where we closed. In Chicago, corn was up 1/4 cent, while beans up 2 1/4, and wheat, a major leader to the upside, gaining almost 10 cents with a 9.5 cent gain. News today was pretty light, and most of the action in wheat was a result of some large short covering, with record shorts being held, according to CFTC's latest report last Friday. So some of the news that came out, there was U.S. plains issues, or we're concerned a little bit about the weather in the U.S. plains. Dryness is expected to spread over the next couple of weeks in the southwest part of that growing region. Nothing to get overly excited about, but certainly with record large shorts, we are not surprised to see some of those shorts start to cover on some of this news. Other news, in India, the temperatures continue to be hot and are expected to be hot in the next 2 weeks, which has the potential to limit production there. While not a big driver as well, keep in mind India and China both have large stockpiles, but those stockpiles are probably at best feed wheat, if not even just really poor wheat. So India has been shopping in the market for premium quality wheat. Overnight they bought 60,000 metric tons from Australia. Taiwan also bought 100,000 metric tons of milling wheat from the U.S. So those all combined got the wheat market a little bit excited today. Let's take a look at weekly export sales. These were pretty positive, at least in the case of corn and wheat. We had corn coming in at the high end of expectations, nearly 1.1 million metric tons, all of that being old crop deliveries and no new crop deliveries. Soybeans came in at 442,000 metric tons, right in the midpoint of analyst expectations, while wheat also came in towards the high end, just above 400,000 metric tons for old and new crop combined. So what we have is a situation where we've had record large shorts in wheat. We've had selling for pretty much a week to almost 2 weeks solid in wheat, and in the case of corn and beans, the last week. And we've been testing those lows in corn and wheat and beans for the last few days. So what's exciting about this, if you're bullish the market, is we're starting to see some signals that maybe this market is ready for at least a short-term correction here after trading substantially lower. Let's take a look at Kansas City July wheat in particular, where we have gone from the peak of this trend, or this downtrend, back in October around $5.50 a bushel on new crop 2016 July wheat. Again, this is the Kansas City contract. We have just been trading lower substantially over that last 6-month period. But we're showing signs of setting the bottom here. And I want to point you to the last few weeks of trading. You'll notice that we have been dipping lower in this most recent level, but technical indicator RSI has been converging higher. That's what technicians would call a sign of divergence, where prices are making new lows, but technical indicators are going in the opposite direction. That can potentially point to a change in trend. So you've got that weighing on the side of a bullish response. Secondly, we have trend line support and trend line resistance and the 50-day moving average all lining up at that 480 mark, where we are getting close to after the bounce higher today. So right now we're around that 475 mark. Look for 480 as a point to maybe really flesh out some of these short positions. If we can clear that 480 mark, then I suspect this record large short will start to leave the game pretty quickly because we have dragged this market so far down. The other thing, here at Grain Hedge, every morning we are sending out our own technical alerts by email to our clients to give them advance notice of where we think the market's going to go. This morning, our technical alert on wheat in Chicago for front month May was suggesting, when we were trading this morning at 450, we could potentially get up to that 456 range. Indeed, we were able to clear that today, getting up to 458 and above on the close. So if you want these kind of indicators to help you in your trading decisions or your hedging decisions, you should visit grainhedge.com and get a free trial of some of the services we offer, including these technical alerts. They can be a valuable tool. Again, grainhedge.com is where you can find us, and by all means give us a call, 877-472-4607. We'll see you on Friday. GrainHedge is pleased to announce a new tool called Technical Alerts. Technical Alerts is free to our trading clients and delivered by email first thing in the morning every trading day. Technical Alerts is a powerful, easy-to-use system that provides quality trading opportunities. Each trading opportunity shows a chart and analysis, providing clear price targets and risk potential to allow you to make an educated trading decision. The commodities covered include grains, livestock, crude oil, currencies, bonds, and metals. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. Let's take a look at how to interpret a technical alert. At the top, you will see a red or green indicator arrow which signifies the market's likely move. Red shows when weaker prices are expected, and green for when higher prices are expected. The summary section shows the expected price target and the expected duration it should take to reach the target. Also, Technical Alerts provides both support and resistance to help you identify key levels on the price chart. Underlying support is where technicians believe there is a level of buying interest, while overhead resistance is the price level thought to trigger more active selling. The support is marked with the letter A on the corresponding price chart, and resistance is marked with the letter B. Below the chart, you will see the data interval of the bars. For example, a 1 hour data interval means the chart pattern was constructed from a 1 hour bar chart. And when you are using the GrainHedge trading platform, you can use the pull down on your chart to change the bar interval to the appropriate time period. As always, we strive to provide you the best tools to improve your trading and hedging activity. If you have any questions on how to use technical alerts, please contact us at 877-472-4607 or by email at support@grainhedge.com.